It's a real pleasure to be here as part of the Atlantic Council's Energy Forum, which is a very important event. And just to get into it, if the slides are ready, we'll put those up. What I want to talk to you about today is venture capital and the importance of venture capital as it relates to technology development and enhancement in our business. And there we go. And I wanted to start off with this slide, which many of you have seen if you've been working with consultants, but I thought it was an important slide to drive a powerful point. Traditionally, some of the top 10 companies globally by market cap have been oil and gas companies, banks, telecommunications. But over the years, if you fast forward, the top 10 companies have become digital companies, and many of them were startup companies at one point in time. Today, these are global companies that have become trendsetters and with an aggregate value and market cap of $4.5 trillion. These companies were venture-backed at one point in time. Another point to share is that in the same period, venture capital was about $50 billion worth of investment in that asset class. Fast forward 10 years, it's become $250 billion. So you're really looking at about 17% of compounded annual growth in this asset class. And that's just on the venture side. Now, corporate venture capital is an integral part of it. In fact, it represents about 20% of that $250 billion. Just last year, 2,750 deals were supported through corporate VC with an investment of $50 billion. Now, today we have about 770 funds that are corporate-backed companies. And just this past year alone, 260 of those venture funds just started up last year. So, venture capital is important, it creates disruption. Corporate VC has a role to play and it's an integral part of the VC asset class. As it relates to the oil and gas companies, many of the national IOCs, international oil companies and NOCs, have some type of venture capital program. And it is a collaborative effort. We work together, we invite each other for investments, so we syndicate on the investment side. And each and every one has somewhat of a different strategy from one another. So, in the spectrum of strategy, VC typically has a financial return objective. So limited partners or LPs come into the financial side, and that's where you'll find the institutional investors such as Kleiner Perkins, Sequoias, the Andreessen Horowitz. But as it relates to the strategic investors, IP commercialization is something that Shell adopted in the late 90s, for example. So they wanted to create companies and commercialize the technologies that they had in-house, and they wanted to go through corporate VC to make that happen. Chevron brought in technologies, so it's bringing technologies from outside in and benefiting from those technologies into their core business. And you're going to hear from Dr. Barbara in a few minutes, who's coming up on stage, who's the president of Chevron Technology Ventures. Now, exploration venturing is something that Total does, where they wanted to sample and try renewables, battery, mobility, and ecosystem venturing. I think it's the best example to share with you is what Intel traditionally has done. So Intel would invest into gaming companies that have a high visual, which creates a demand on a fast microprocessing chip. And so you're affecting the ecosystem. In today's discussion, as we talk about sustainability in oil and gas, you're going to see a lot of the strategy starting to shift more to the ecosystem venturing in order for us to be able to sustain our businesses. Now, there's no right or wrong here, but it's really about execution and how well you execute. So as corporate VCs, you bring something more to the table. And that is the expectation. So money is fungible, it is the same for everybody, but what you as a corporate bring above and beyond what an institutional investor is not just the brand equity, but the ability to pilot and deploy those technologies into your own operations. So the startups are looking to work with your engineers to tweak those technologies to their needs as a customer, and then try to get that pilot deployed and have that brand equity that says, not only have we invested, but we've also piloted and it's actually working. And that raises the value of that company and ergo the value of your investment as well. So in 2012, Saudi Aramco decided to create its own subsidiary that executes on venture capital. And SAVE, or Saudi Aramco Energy Ventures, was allocated $500 million to invest into startup companies internationally. And so far, I'm happy to share that over the past 7 years, we've managed to amass 45 different investments between the US and Europe. Half of that portfolio is either piloted or deployed into Saudi Aramco's operations. And these companies need that help. So technologies themselves being developed is one thing, but you really need to help these companies and those technologies get into the commercial state. And that's where the corporates have a role to play. Now, as we look at the energy transition, the arena, as we see it at SAVE, starts off with the energy mix. And this is not an exhaustive list, and biofuels needs to be up here. The different fuels goes in as a feedstock into the downstream, manufacturing, power generation. And then you get emissions coming out of that you want to capture, storage, and reuse. And you also want to counter by planting trees and other types of effects that would help that. The products of this goes into the consumption side. So this is the arena in terms of where we need to play as it relates to sustainability. And there is so much room for enhancements and improvements on technology here. We play on renewables, energy storage. We've also are looking very hard at the hydrogen side, and mainly on the supply of hydrogen into the service stations. Energy efficiency, we're seeing the digital transformation and the advent of that, creating so much room for efficiency on the manufacturing side and the operational side. Capturing emissions, we've invested into a company called Daphne out of Europe. They capture SOx and NOx coming out of ships so as to meet with the IMO 2020 regulations. And Saudi Aramco themselves are actually quite happy with latest results on heavy-duty vehicles, trucks. We were able to capture 45% of CO2 emissions from heavy-duty vehicles. So carbon capture and mobility is a key theme for us as well. Talking about what you do with carbon, the company, the parent company has managed to push 800,000 tons of CO2 for enhanced oil recovery over the past 3 years, and that's been a very successful example. We ourselves on the investment side have invested into a company that takes CO2 and creates polyols from it, which is plastics effectively. In fact, that portfolio company was so important to Aramco that we were able to exit to the parent company. So they bought that company and called it Converge. Consumption side, is that a play for us? I believe so. And as we saw in His Excellency Dr. Fatih's slides, consumer behavior and changing that was just a small piece of it. But I think that there's a lot of room for change there. Once you come up with ways for people to measure their carbon footprint, you will already start changing behaviors. So as you think about it, there are so many things to do, and hopefully we'll be able to meet Paris. But luckily, we're not alone. So while there's venture units and investments out there, there's also consortiums, and many of you are familiar with the Oil and Gas Climate Initiative, OGCI, which is a consortium of 13 oil and gas companies, each of which have committed $100 million into their investment vehicle, making a $1.3 billion commitment to reduce emissions, accelerate low-carbon solutions, and also to enable a carbon circular model. I'm also very happy and proud to share that both Aramco and BP were very instrumental in setting up the investment vehicle, and it's been operational since 2017. So far, they've done about 15 investments to date in the same verticals that are being discussed. So I guess I wanted to share with you the importance of venture capital, the importance of corporate VC, and how we can help on the investment side in sustainability, and I hope this was helpful. Thank you very much.